Imagine walking into a grocery store. You pick up vegetables, a bottle of wine, and maybe some fruits. You head to the checkout, tap your phone or card, and then buzz declined. Oh, what a bummer. You check your balance, you have plenty of money, but a message pops up. It says your carbon allowance is too high or the vendor is not approved. This may sound like science fiction, but it's our new money reality. For thousands of years, money was a passive thing. A gold coin or a dollar bill did not care who held it or what it bought. It was just a tool. But right now, we are seeing the biggest change in the history of finance. We are moving from money that you own to money that controls you. Today, we are going to talk about the Central Bank Digital Currencies. They're also called CBDCs. We will see how they are being designed to track your spending and control your daily life. We are going to look at programmable money and exactly how central banks plan to engineer your behavior. To understand the danger, we have to understand the change. In the old world, the government used a blunt tool called interest rates to control the economy. They would raise rates to make borrowing expensive, or they would lower them to make it cheap. It was like trying to steer a massive ship. It took time and it affected everyone differently. But digital currency changes the game completely. It moves us from decentralized assets like cash or Bitcoin. No single person controls those assets. Now we are moving to centralized tools. This is the birth of active money. Traditional money is passive. It sits in your wallet until you use it. Digital central bank money is active. It is programmable. It has rules written right into its code. Central banks do not have to wait months to see if an interest rate hike works. They can now control individual transactions in real time. They are not just steering the ship anymore. They are driving every single car on the road. They are moving from influencing the economy to enforcing policy directly through your wallet. Ever wonder how this plays out in your everyday life? Let's break down these spending limits. The first cool tool they use is called geofencing. Imagine the government wants to boost the local economy in your specific town. They could program your digital money so it only works within 10 miles of your home. You try to buy something online from a different state and it is blocked. You try to spend it on vacation and it is declined. Your digital wallet might link to a personal data profile, kind of like a lifestyle credit score. Pretty wild, right? The system might think you buy too many things that are harmful to the environment, like gasoline or red meat. The algorithm steps in. It does not matter if you have the funds. The transaction is blocked because you have used up your allowance for that category. This is made possible by smart contracts. These are automatic digital agreements. Let us say the government sends out a stimulus check. In the past, you could use that check to pay down debt or save for the future. With programmable money, they can lock that money. It can only be spent on food or at specific approved vendors. Your purchasing power is no longer yours. It is a permission slip granted by the state. If telling you where to spend is not enough, they can also tell you when to spend. This is the expiration date tactic. Economists have talked about negative interest rates for a long time. In a digital system, they can do this directly. They can give your money a shelf life. Imagine you get paid on the 1st of the month, but the money is programmed to expire on the 30th. What's the deal? You can't save or plan for tomorrow. You end up spending every penny right away, and that totally wrecks your financial freedom. It just turns you into a consumer. Behavioral data shows us exactly what happens here. It creates panic buying. People rush to buy things they do not even need just to get rid of the money before it vanishes. It prevents you from accumulating wealth. It keeps you on a permanent hamster wheel. You live paycheck to paycheck by design. Now, let us go a step darker. What happens when your money is tied to your behavior? This is about engineering social compliance. We are seeing a merger of economic incentives and social credit systems. If you act like a good citizen and do what the state suggests, maybe you get a small digital bonus. But the opposite is also true. Suppose you engage in unapproved social activities. Maybe you attend the wrong protest or donate to the wrong cause. The consequences are instant. They do not need to send the police. They just freeze your wallet. In a fully digital system, freezing your funds makes you financially paralyzed. You cannot buy food. You cannot buy a bus ticket. You cannot pay rent. It creates a direct link between your political obedience and your ability to survive. Finally, we have to talk about privacy. Cash offered something unique. It offered anonymity. If you bought a sandwich with a $10 bill, that was between you and the sandwich shop with central bank digital currencies. that privacy is gone. Every single transaction is recorded on a centralized ledger. This isn't just about banking, it's total surveillance. Authorities will see everything you do, building a profile based on your spending. They'll know what meds you take, where you travel, and even what books you read. Real financial freedom means having the option to step outside of this system. It requires holding assets that cannot be programmed. It requires assets that are not watched. It requires assets that cannot be turned off with the flip of a switch. The convenience of digital currency is the bait. The trap is the loss of your freedom. The question is whether you will walk into it willingly. Thanks for checking out the video. If you found this info helpful, go ahead and smash that like button. And don't forget to subscribe for more updates.